Investors and traders, welcome to the channel Market Chart Pattern. Today is 21st of June 2023, and in this video segment we will be taking a look at the key US stocks that we have been following for this video segment for quite a long time. This video is for educational purposes only and it is not a financial advice. So what we are looking at is the daily chart of the Microsoft stock, and here what we can see is that this stock has been rising in a very nice channel formation, and all of our targets that we were looking for have been met. So initially we were looking for $320 per share level, and once the price began to move above that, we also had a 1.618 expansion coming at around $344 per share level. That has also been met, and in fact what is happening now is that the stock is pulling back, and it appears that the stock has formed a double top formation based on the high that was on 22nd of November 2021, so quite a while ago. And what we can see is that the stock has been rising in a very nice channel formation, and it was reaching towards the top of the channel. So from here what we can expect is the price, as it is pulling back, it's sitting right at the shorter term 20-day moving average, and from a momentum perspective the stock looks good. It could perhaps pull back towards the bottom of this channel, and the largest correction which had taken place in this run up has been of this much. So if we just project it from here, it could take it to a little bit below the channel, so around $300 per share level, roughly speaking, but it will still be in a upward moving stock, and the perhaps the 200-day moving average might be catching up to this price level if the correction takes place and this stock in fact moves towards the bottom of this channel. Let's take a look at Apple. So just like Microsoft, Apple has also met and exceeded the targets that we were looking for. So we were looking for 171 to $175 per share level, and that has been met. And also it has taken the highs out of the highs which were reached around at the beginning of the year in 2022. So I'm going to actually make some changes, and I will just say target met for now. I'm going to remove this. um, here we go. And here what we are looking for is perhaps because of this extended rally, and also looking at the overall market, which I will be doing a separate video, so keep on watching or be on look for that. um, Perhaps there is going to be a pullback as well. Um, One of the levels we can look for is about $180, which is not far away. And we can also draw a Fibonacci retracement right here, and 38.2% retracement comes around $170 per share level. So that is something also on the lookout, as it appears that this stock is in fact going for a pullback after having a really extended rally since the beginning of 2023. Now let's take a look at the stock shop, which is the Shopify. This stock has actually performed really well after bottoming in on 13th of October 2022, so along with the broad market, and it has been moving nicely in this channel formation. And now the stock actually moved and formed, in my books it is a double top formation, where it has touched one times and then second time the upper boundary of the channel, and there's a possibility that a correction might in fact take it down to around $55 per share level, which is the bottom end of this channel. From a momentum perspective, the 200-day moving average, long-term average, comes around $42 per share level. So reaching around $55 per share level, it's also going to be still positive for this stock. Let's take a look at Amazon. So the Amazon stock here, what we have is It has reached the 61.8% Fibonacci retracement of this swing. The price is a little bit above that, that's fine, but it appears to be forming a rounded top formation. This stock looks like also, although it has done well, but it has done its ABCD formation, and our target was $120 per share level, which has been met. So that's good. And what is happening now is perhaps looks like the stock is also going to go for some sort of a correction, and the biggest correction that we have seen in this leg up has been of this much magnitude. And if we just project this down, what we can see is it will come in line with our, perhaps a little bit exceed as well, this trending line from the bottom here. So it does appear that maybe a 50% correction of this stock to come around $102 per share level might, it's possible. Although if we look at this stock and certain stocks like Apple, Microsoft, they are way more strong. This one has pretty much come into the middle of its trading range. So uh, from what is going on in the economy in terms of higher inflation, because this stock is categorized as discretionary spending. Maybe that is one of the reasons that although it's been rallying, but it's not been rallying as strong as some of the other stocks. Now let's take a look at Tesla. So apologies, we I did a video yesterday, and the audio quality wasn't good enough. Somebody put a comment about it, so I do apologize for this one. I did test. The audio is much better. So for Tesla, we were looking for $270 per share level, and the pattern formation highlighted in advance, I believe a week in advance, uh, called for this $270 per share level, and in fact the price exceeded that, and today we have had a pullback in the price. It is an outside bar formation and also a bearish engulfing. So if we just go on the left hand side and look at this stock, we have always seen some sort of a bear candle of some significance, and that has led to declines in the stock price. So longer term, we remain bullish about the stock. Shorter term, our target has been met. A correction in the stock, in my opinion, will be healthy. And now, one of the key things that we look at market chart pattern is a symmetry, market symmetry, because markets repeat over and over again. So here we had a correction of this much magnitude, and then we had a similar one. And if we just copy this and project it, I don't know exactly what the top is, but assuming this is the top, because we still need more confirmation from the price action, we get a target of about $222 per share level, and the biggest one altogether has been of this much magnitude. And if we just project it from here, we get a level of about $210 per share level. So it's possible that if there is going to be a pullback, it could be between $222 and $210 per share. And if we just draw a Fibonacci relationship, here we go. What we can also see is, since the beginning of this year 2023, all this nice run up in the price, it will be a 38.2% Fibonacci retracement, so not bad. Here we go. If I draw it like this, so that might be a possibility, but for now, okay, I'm gonna leave it here, because maybe it might just help visually for some people to take a look at the chart. But this is what we are watching in Tesla. Now let's take a look at Netflix. Netflix, we have a target which is way higher, it's about $500 per share level, and the stock has reached the high of roughly about $450 per share level. And because of the pullback in overall market, we have seen a couple of days of decline in the price, and what it means is that we are looking for, perhaps in this If our analysis is correct that it is moving in an ABCD formation towards the $500 per share level uh, target, in fact it's around $490 per share level, then we have the correction in this segment of this much. We try to project it from here, and we get a target of about $410 per share level, which is not too far away given where the stock is trading at the moment. So here, if we just try to draw a Fibonacci retracement, we get a 38.2% Fibonacci retracement coming in about $400 per share level. That is one possibility, and if we just draw it from the overall rise which took place on 13th of March, we get a level of about $385 per share level. So roughly speaking, what we are looking at is about $400 per share level is a possibility, which is about $23 lower from where the stock is trading right now. And if it begins to exceed 380 or $390 per share level, then we'll have to do another analysis about the pattern formation, because what it could mean is that maybe there was another level here which I might have missed, which might be of some sort of significant resistance. But this is what we are looking at right now for this stock. And Roblox. So Roblox today price action is actually negative, fairly negative, looking at the candle and just right at the 200-day moving average. And what is important to note is that the way we are looking at this stock is that we think it is moving in an ABCD pattern formation higher towards $56 to about $60 per share level. Uh, and for this to happen, this low, which is at point C, $33.63, it must remain as a support. If this level breaks down, then we are looking at a different pattern and lower prices. As long as it remains as a support, then the possibility of this ABCD pattern, which we think this where the price point moving in, it is on the table, and we could see $56 to $60 per share level as our target in terms of price for this stock. So guys, this is what we are looking at in the key stocks that we follow. If you like our analysis, how we look at the market using pattern recognition, Fibonacci analysis, please do subscribe to the channel. And I wish you good luck and good trading.